Good evening to one and all. Today we will move on learning more about stocks. In the previous lesson, what we told was stocks are nothing but a part ownership into a company. So, the ownership can be a very minuscule ownership, which can be 0.001% of the company, or it can be 1%, 10%, 50% of the company. So at the end of the day, what you need to understand about the stock is that you are basically buying into the company and investing into the company. So the decision you make of buying into that particular company can be your own decision. It could be because somebody told you, or you feel that the company is popular, or you have done a detailed analysis of that particular company, and then you feel that that sector is doing well, or you analyze the company and then you realize that look, this company uh, is very promising, so I try to invest. Or there might be some companies whose dividends are very high, so you say that look, I buy into this company because they give a lot of dividend. And as I told you yesterday, dividend is nothing but the profit of the company is shared with the owners of the company. And the dividend is given in proportion to the share you hold. So if you hold 10 share and the company declares 40% dividend, then proportionately you get that particular dividend which is going to be there. There are more things which has to be told. So let us, I'll go through some things now and then think of it. Now, what you have to understand first is what is a stock exchange, correct? So we have understood what is a stock. So we go into what's a stock exchange. You have to imagine stock exchange to be like a very big bazaar. Okay. Now in our cases, it's a virtual bazaar. So you would be able to have be able to see. So what happens in a bazaar? Basically, a lot of people come in, and there are people who want to buy, there are people who want to sell, and that exchange of buying and selling keeps happening, right? So in India, there are two major stock exchanges. One is called NSE, which is the National Stock Exchange, and the other is called BSE, which is called Bombay Stock Exchange. Now, Bombay Stock Exchange is much older than the National Stock Exchange, and so basically, stock exchange is the place where you are in a position to buy and sell. Now, the main difference you have to understand is that when it comes to the exchange part of it, you would not be able to buy or sell a share directly. You always need to go through a broker. Broker is an intermediary who charges you a certain percentage of commission for buying or selling a stock. So technically, the broker is the independent intermediary. So in those days, it used to be a physical kind of share which is there. So brokers used to be on something called the trading floor. So they will be there and there will be people who are shouting that company and they'll say, I want to sell this, somebody will say, I want to buy it. Then there is a agreement which happens, and then when there is a price understanding between the buyer and seller, then the trade takes place. Today you don't have physical what we call selling which happens, which means before you used to get a physical stock, you will know, and that paper stock will be there. These days it's not like that. These days what they do is it's all electronically being done. So you put your sale and you say that look, I've got this particular share XYZ, and you say I am willing to sell it for 1,000 rupees, and there is somebody else who is a buyer who is there who is willing to buy for that particular amount which is there. So if both the seller and buyer matches, then the trade happens. So the examples of brokerage are Ind Merchant Bank, uh, then you have got ICICI Direct, and so many other things are there. Then I think there is zero brokerage or something like that. Some companies claim that they don't charge any brokerage and so on. HDFC Direct is there. So there are so many companies which work as a broker, and you will see later on as to what is the brokering, how do you buy a stock, how do you sell a stock, and things like that. And because these companies are traded in public, then there is a need for somebody to regulate it, which means that the trade has to happen fair. There should not be any unfair practices in the environment and so on. So you have something called SEBI. SEBI is the full form of SEBI, is Security and Exchange Board of India. Basically, SEBI is nothing but a regulatory agency, which means that they are like a watchdog. So they keep an eye on whether things are being done fairly, and uh, uh, then if there is any kind of malpractices, they correct it. Correct. So that is what happens. Now the question which comes in is, what is the basis on which the price change? So the basic reason why the price changes is based on the demand and supply. So as you know, if there are more demand for a particular stock, then the price moves up. And if there is less demand, then the price comes down. So if you have a particular stock and say that stock is traded at 1600, and there are 10 people who want to buy at 1600, and then there are only two sellers, then that price keeps moving upward. So if there is 10 people who want to sell at 1600, but there are there are 100 people who want to buy it, then the stock moves up. So basically, what really happens in a stock market is that the price keep moving up or moving down. There are more complex to it, which as you move forward, you will come to know. Which means sometimes there is a limit to which the stock can go up or come down. So these are called circuit breakers. Basically, if the stock moves up more than a certain value, then what really happens is the stock exchange will stop trading in that stock for a period of time. Or if the stock gets badly hit and it comes down, then the stock will be put on hold for some period of time from not being able to sell. Okay. So, so first thing you have to understand is that there is a demand and supply which happens on the stock, and then the next question which asks is, how does the demand happen? So generally the demand happens broadly because of two reasons. One is there is something called a fundamental factor, which means that the company is good, its result is good, or you say that the company is an emerging company. So you see a lot of reason why you have to buy that company, or the company is uh, have paying out good dividend, so you want to buy that particular company, or the management of these companies are good, so you want to buy it. So the factors which affects one of them are fundamental. Basically, it's driven by quality. So you say, for example, if you look at Tata's, then many people buy into that particular stock because it's been stable, it's been for a long time, uh, its management is transparent, and so on. Sometimes the market also moves because of sentiments. Sentiments are factors which are more emotional in nature. The one caution I would like to make to you is that we are driven by sentiment, so we should somehow try to have a logical, structured way of trying to bottle our sentiments. Otherwise, we get into a trap of, uh, buying some stock because of sentiment and regretting it. So, some of you being beginners and some of you being seasoned investors, you have to understand that sentiment is to some extent a risk factor. So, um, you have to have a way of managing sentiment over a period of time. We'll figure out how to do it. And as I told you, the report which I'm going to build is in a way trying to contain sentiments, where we logically analyze a particular stock, try to understand what the various factors of the stock, and then we make some decisions like, look, this is the fair value of the stock, so that we don't suddenly buy into the stock which is unreasonably priced, or we have an exit strategy of saying probably this is the price at which we sell, so that we don't hastily sell at stock. So those are some things which we will try to manage by building a report. But even if that is not there, you have to have a method of trying to manage this entire exercise. This is a discipline you have to build. But remember that in the beginning, when you are into the stock market, you will be driven by sentiments. Okay. So suddenly there is a war breaks up. Trump comes into politics. There is a terminal politics, something changes. There is a central politics where the prime minister change. All this happens and it has the impact of the market which is there. So the the demand and supply being one of the factors, apart from this particular factor, you also have this particular problem of trying to manage how uh, the sentiments happens in a stock market. Okay. Now I have completed 10 minutes. The what I would like you to do is go to this particular site because National Stock Exchange is what I generally recommend. Although Bombay Stock Exchange is all there, but I'm more familiar with National Stock Exchange. Go to nseindia.com and try to look at some of the stocks which are there. Take one stock, either HDFC. So there'll be a bar on the top. You can write the name, Reliance Industries. You can take any of these names which are there and try to read through the contents of the stock. What is the opening price? What is the closing price? What is the days high, day low, and so on. So first, try to familiarize this, and this is a simple exercise I would like you to do. Okay? Thank you for the day. We'll continue the same thing tomorrow. And as always, I'll give you a Canvas link where the brief of what we have discussed will be there, and then you can use this to refresh your understanding. Okay, thank you.